How we feeling tonight, guys? Hopefully all is well. Usually these harder days, we see a bigger crowd, right? Hopefully all your guys' trading went well. I like to say hopefully you guys made money, but I mean, that's not the right way to go about it, I feel like. Glad you weren't alone in finding this one challenging. Well, I definitely read up on the messages from today. I personally did not trade. When I see the opening range and the first 30 minutes are shit, I usually take a step back. And I think I've said it multiple times before. Sometimes I miss out on a good trade, but it's worth it because the times I don't, I just end up going for a max losing day. So, in terms of returns, no, of course not. It's always going to be worth it to stick to it and look at it. But this is a psychology reason. Now, we were Thursday and a lot of news. Now, when we have a trending week, Thursday is the retracement day. It is that simple. It is pure statistics. When all three previous days go in the same direction, Thursday will form a retracement. Also has a high probability of forming the high of the week, but we won't get into that. That's for tomorrow. So as you can see, Thursday was a very nice retracement into recent inefficiency that was formed this week, right? From Monday, Tuesday, and Wednesday's expansion, we formed a fair value gap. Now we retraced into that today. So definitely some very nice price action in regard to that. But it's when we go down to the lower time frames where today was a little bit trickier, is the way we can look about it. All right, so we'll go and have a look right away, go down to our 15-minute and look at our liquidity pools that we like to look at. So as you can see, low of day was formed in the daily fair value gap. Now, if you weren't looking at this specifically, then of course today may have been confusing. But I always want us to focus on the structure, right? The day structure. Let me remove lunch here for now, at least. We can look at it once we're looking at the PM session. But what is the daily structure looking like? We have accumulation right at the open, right? Very, very clear structure. There it is. So we have accumulation right at the open. Next up, we have a nice manipulation lower, giving us all the confidence in the world to say, hey, well, today I'll be looking for distribution higher. I'll be looking for longs. Did I even save the distribution? I think I did. And I did not. I have manipulation though. I made some pretty boxes to try and make these reviews a little better on that sense. But definitely some very nice P8 that indicated that you would have been looking for longs. Now, we had a bunch of news right before the open, right? We had 8:30. I believe we also had Powell speaking, or maybe Trump, somebody speaking at 8:40. So definitely a very nice framework to go long, but we needed to wait for the 9:30 open to have those trades, right? And just to talk about longs, right? I'm always referring to statistical framework, statistical target. Beautiful example of a London framework, giving you your target at London high over 70%. We have midnight open and the daily open in a cluster, which is very high probability of a target as well. And then, of course, previous day low, previous day high, Asia low. It was really just a cluster of statistical objectives between previous day high and London high. This was a very, very clear objective in my mind. If we go down to the 1 minute now, let's look closer because that's where it could get a little more confusing, right? We look at the AM session here, and let's actually bring a little background so it's going to be easier for us to notice. Please, AM session, there you are. So if we look at the AM session right here, right, we can clearly see that at the start of it, we had some consolidation. And that's where a lot of people get stuck, right? Because if we think about it, most people will just see this chart and be like, okay, consolidated a bit and then went right on it. But if we think about it as traders, we understand that, hey, watching this happen for an hour and 7 minutes is really fucking hard. That's the truth, right? Not taking a trade while watching this happen is extremely hard. Now, I'm not going to talk about not taking a trade because when you have a mechanical model, you don't need to spend your time worried about stuff like that. You have a clear objective to go higher. So is it clear to say that any trades higher should have an edge, should be profitable in the long run, you have a statistical target. So any unicorn I trade during this time period will bring me profitable in the long run, right? It's plus EV is what I'm trying to say, right? It is a profitable move to make. Well, yes, 100%. God, that 1 minute was rough. I gave up just to later see I was right on direction. Yeah, I personally only looked at the first 20 to 25 minutes. And it wasn't really interesting for me. As you can see here, we're finally going. This did not give me an entry, and I didn't want to FOMO and chase on the trade, so I just decided to leave that hanging. I'm going to be honest with you guys, a big reason for me closing my charts is because I was hungover. All right, so yes, I went. We had a little barbecue between friends, and I had a little to drink. So waking up this morning, I wasn't top notch. All right, so I did prematurely close my charts, but it wasn't the best mental space to be trading for that. Sound is cutting in and out for me. Anyone else that this is happening? I can restart the stream if it's more than one people. If not, it could definitely be your network connection, Speakock. All good on the other side. I definitely recommend just restarting your Discord. That might help solve it. But just get back on track, right? So any single longs within this period is a good trade, right? Well, of course, we have other criterias, but any bullish unicorn setup is fair game, right? So I'm just going to start, just to make our life simpler, by highlighting all the bullish breaker blocks that were formed during this time, right? So we have our first one that was formed pretty early, right? Well, once we traded through here, so at 10 a.m., right? What else did we have? Okay, well, I'm looking for swing low to swing high, then have one side broken, and then the other side broken. All right, well, I don't have one. I don't have another one until this one. And then, of course, this becomes a breaker trading higher here, but it's irrelevant since for that same move, we had an earlier breaker form. So truly, there are only two breakers. And I didn't look at SMT yet. It's a little weird because when I'm looking at it live, like when I have traded this day live, then I can tell you which breakers would form with SMT. But now we have to go over. I'm looking at swing lows because I'm only looking for bullish breakers, right? I don't care about bearish breakers because I have clear targets to go long, right? So I'm just looking at SMT at the lows. I'm not seeing any that would have formed breakers pretty much, right? So I'm seeing bearish SMT here, but no breaker blocks were formed within this leg. If we would have traded higher here, then we could have discussed it. So no, really, you only had two breakers. So it was a pain to look at, but the truth is both, well, one would have been a loss and the other one would have gotten you a win. So let's actually look at it. I have my breaker, and now I have my overlapping PD array, and we even have a tiny little inversion fair value up here. Let's see. I'm looking at this tiny guy, or is it really? Let's look at this. The low, I'm looking at the top left. The low of this candle is 21,320. The high of this candle is 21,319. So it's a one tick IFVG. But as you can see, it aligns perfectly with the fair value gap. So absolutely exactly the same entry. But it's still important to mention it because from a mechanicals perspective, this is the first one that presented itself for this unicorn entry. Now, with that inversion fair value gap, this would not yet be a fair value gap, so you can't count it because it's not yet a fair value gap, right? If you're having a hard time with things like these, just go in replay mode, right? At this point in time, and let's look a little previously, actually. At this point in time, you have fair value gap, order block, inversion fair value gap. So if I enter on this inversion fair value gap, my stop is at this, which is my third PD array. And of course, when we have a swing adjacent to the order block, we'll use that as our stop loss. Then London high does not provide enough risk to reward, but Asia high and previous day high are clear objectives. Looking at the standard deviations as well, aligning beautifully with your target, right? So this is a very clear trade. On the next bar, you are entered in this trade to the tick. All right. Well, this is not yet a fair value gap, so my stop can't change, right? It's only when this bar closes, so after this bar and when the next one opens right now, that you can now regard this as a fair value gap. It is a 3-bar pattern. So it's important to mention, it's a lot easier when you go in replay mode to notice these sorts of things. But to be honest, this is the kind of stuff you pick up that the more you trade, the easier it becomes. And as you can see, it messed around near your entry for a little bit and then just went straight to stop you out in 3 minutes, right? Not necessarily fun. Is there a breaker at 928 with SMT? So 928. So SMT or not, as you can see, this candle took the high and the low. So we'd be focused on the order in which that happened specifically. All right, so we can go down to seconds. I really don't like doing this anymore because I don't recommend it, but let's go look at it. Okay, so we want to see 930. So ain't no fucking way I'm going at it manually. So 930. And now my indicators are being a pain because we're looking at 5-second ranges. Let's just hide all. There we go. Okay, so right here we have 930. As you can see, we're looking at this price action pretty much. Now, of course, there will be, well, actually, there's not even a 5-second breaker here, but we took out the high before taking out the low, right? This is what we're seeing? I believe so. On a 5-second chart, which is delayed with CME data. It's really not the best, but as you can see, 930 opened right here. This was your move lower. You took out the, there it is. So we're looking at this range, pre-930, right? Then 928 or whatever, it's this range. You took out the high before taking out the low. I haven't looked at a 5-second chart in quite some time. So see, that would not have created a breaker. But if we didn't take out that high, took out the low, and then took out the high, then yes, 100%. We're looking for specific sequence in price, right? Yes, see, my lines are correct, so it is indeed that. What we are looking for that sequence, right? Truly. So it's the order that we are focused on. But even then, you guys know me, even if, let's just say you took a bad trade, right? You took an extra long somewhere here, I don't know, where it should not have been a trade because it's not a valid unicorn, but you still took a long and you took an extra loss. Well, as you guys know, I'm allowed 2 full losses and a half risk loss. Well, I'm talking about trades, but my maximum losing day is going to be 2 losses followed by a half risk. That's what I'm allowed to trade. So in this case, I would have still been able to trade this. Just looking out for the people that might be a little bit newer to this and it might be a little bit harder. Well, it's still plenty of opportunity, and the risk management that we use allows us to still trade more. Now, if we look at this entry, which is your second breaker block that was formed in the New York AM session, overlapping fair value gap, and before you guys say, no, there is no inversion fair value gap entries there, you would look for your 3 PDRA stop loss rule. Is this, I'm going to look at the low of this candle, 314.75, and the high of this one, 315. Okay, so no fair value gap there. You have inversion fair value gap and order block. So the low would be at the low of the inversion fair value gap candle right here for your 3 PDRA stop loss rule. Right, so decent stop. Once again, London high. Well, I mean, 1 tick higher could allow you to take profit here, right? Our rule is 1.7R. So I would definitely look to take profit here. But when you have also a cluster after at just 2R, I'd be very, very confident in holding up till here. Very simple. The probabilities, just the dry probabilities at the 9:30 open for us to return to this midnight open before 11:30, I believe, is the latest stats I tried. If you guys have right statistics, definitely go have a look. Retracements analysis. Midnight opening price, right? 0-0, very high probability target. So it's a little, it's easier to have confidence in these moves, right? And then of course you have London, and then you have Asia and previous day high, which are great objectives as well for high probability. I mean, at that point, it's very easy. So this allows me for much better. Let's be pessimistic and say you would have partialed here at London high. Well, you still had another partial opportunity here at previous day high or Asia high. I wouldn't do both, right? But I mean, I tell you guys, when I have a target in close proximity, if we reach this one, we're going to go sweep this one too. So that's what I'm looking for. Of course, unless there's going to be SMT formed, which in this case there was after taking previous day high on NASDAQ, ES. So if I was long on ES, this would give me a reason to close out my my trade in this case. And moving forward, well, we can see, let me remove the AM session here. We can see we had a pretty nice run as well for almost twice the size. Now, where are you going to take profit here? Higher time frame levels? Sure. Truth is, I'm just trailing my stop. And let's actually look at my mechanical way of trailing. So after previous day high is met, I'm going to be looking to trail my stop. So we have a retracement formed here. I'm just looking for expansion past the swing high and then updating it to the swing low that was formed right after, right? So the range. So right here, we expand past this swing high. So now my stop is at this low. I'm looking forward. I'm looking for expansion through, which means that the stop will now be right here. Just continuing to move forward. I just wanted to give you guys a little example. So we expanded through this high. This is now the stop. We expand through this high. This is now the stop. And we expand through this high. This is now the stop. This is where I would have gone in trailing stopped. So as you guys can see, a very simple mechanical logic of trailing your stop just gives you a great result, which allowed for an extra, what, 2R? 5 point, yeah, a little over 2R here. And of course, you could say, well, what if I exited right at the top? I would have had even higher. I would have had almost double what my trailing stop. Yes. But did you get more than this? Yes. This is just how easily I trail my stop in cases like these. Trailing with SMT is also a pretty good one, but I feel like it leaves a lot on the table. So basically, you're waiting for SMT to be formed, and you're only going to trail your stop at SMT lows. Of course, in consolidation, that's not going to work. And outside of consolidation, I feel like it leaves a lot of return on the table. So definitely just a very nice one. Now, one thing that we haven't seen in a while, right, after, of course, looking at these longs in the morning, is a PM lunch trade short that actually wasn't using the noon to 1:30 range, but the noon to 1 range. So it's been a while since we've seen that, actually. But if you guys remember, we have a very specific criteria that allows us to use the noon to 1 range instead of the noon to 1:30. And when is that? It's when a higher time frame objective has been met or our retracement objective has been met. So what is our retracement objective? Well, as you can see, the morning went up. So what if lunch was a retracement lower? Well, then I'd go into my 5 or 15-minute chart, look at the first discount and efficiency, and say if that has been met during lunch, I can look at the noon to 1 range. Okay, but lunch wasn't retracement, lunch was expansion. Did we reach a higher time frame objective? And now it speaks to the whole move, right? So since 9:30, yeah, we hit previous day high. Now, if you want to go deeper, open your daily chart, and now you're going to look and you're going to say, hey, we hit a bearish fair value gap. Sure, I don't like to complicate things like this. I'm looking at recent liquidity. So in this case, just looking at previous day high would have been plenty for me to consider taking a lunch trade short. Let's look at it here as well. And with the same thing on ES, let's look at the noon to 1 range. As you can see, very hard, but right here, this is your 1259. So 1 took out directly the high of that range, and you would have had an opportunity for a lunch trade. Now, of course, that noon to 1, it doesn't mean that I look to start trading at 1 p.m. I still wait until 1:30. That is the start of the PM session, and that is where I will look to start trading any sorts of PM shorts. And as you can see, price waited for that time. This is nothing new, of course. As always, it looks cherry-picked, but no, it is nothing new. Ask Wolfe here. He was in class with me when I taught him this, all right? So I don't know why I feel the need to justify myself every time, but when it's picture perfect like this of like, hey, why are we not waiting for this? It's important to mention the rules. There are clear rules that define how I can trade these moves. Thank you for backing me here, Wolfe. Very clean bearish breaker. This is the first one. Of course, if there was SMT at those highs, it would have been even cleaner. But we had to wait for a bearish breaker to form. As soon as that bearish breaker formed, you can see we actually had an entry on a bearish unicorn. Now, 3PD array stop loss rule, I don't see any inversion fair value gaps here, so it's fair value gap, order block, and order block. So once again, 3PD array stop loss rule, very simple. It's both, NJ. I just explained this. I don't know if you missed that part, but we have clear rules that tell us when to use the noon to 130 range, which is always except if we can use the noon to 1 range, which we have specific rules. If a higher time frame objective has been met, previous day high, we can go even further to a daily chart and say we are within a daily bearish fair value gap. And our other criteria, if the lunch retraces the move from the morning session, if it has met our first inefficiency. So if it's a bullish, right, we're going to look at the first discount and say retracement objective has been met. See, I have a bunch of examples in past PA reviews. That's why I want to start categorizing them. I tried with the titles, but I feel too much like a YouTuber with those clickbaity titles, and I really don't like that. So I was thinking of doing it in resources a while ago, but I think I'm going to do it even better on like a website or something. Still thinking about stuff like that. Pretty overwhelmed at the moment, but definitely will get back to you guys once we have something clear. And of course, now lunch low is just a clear objective. We can consider take profiting along the way. Most importantly, right, if we have the range we're looking to reverse, right, with that lunch low, why am I taking why am I taking this low and not the lunch low? Because these are all relative equal lows, right? So I can expand further. I'd go to a 5-minute, look at the first discount and efficiency. In this case, it is this set fair value gap. Very beautiful. And if it provides enough risk to reward, definitely will be a take profit objective. And yes, right here, 1.88R, partial, followed by once again lunch low. But why would I wait? Why would I hold? Because these are all relative equal lows. And as you can see, would have been a very nice 4.3R with, of course, the opportunity for a lot more. In cases like these, I'll always hold a runner until our retracement objective. So for example, I'll use the current daily range. So I'll use this full expansion, and I'm going to be looking at the first discounted efficiency. Why am I in a 15-minute chart and not in a 5-minute chart? Well, very simple. It's a bigger fucking range. Honestly, in this case, I could even go to a 30-minute chart because it's even bigger. And see, in this case, it would have been this order block. We did not reach it. I never actually used the 30-minute for this, but I'd be interested to see if it's actually successful. But 15-minute, definitely the way in the case for large ranges. If not, it's going to be the 5-minute chart. I'll test out the 30-minute. See, I know in this case it would not have worked out, but perhaps it's something valuable that we should look at. But as you can see, that's actually where the low of day pretty much formed. So runner would have been closed right here before the last 30 minutes of the day formed a little reversal. Power Hour likes to do that. I can assist that once I have a full-time job. Lovely. Focus on you first, though, right? Don't try and help me out. I don't need help, right? Focus on you. And once you have extra time, you'll notice that as traders, you have to fill that extra time. If not, you're always going to be eager and angsty, I think is the word for it. I'm not a native English speaker, so might not be using that in the correct term, but it does translate to your trading. Old mentor used 30 minutes for reversals, never saw it help. 15-minute is best, fair enough. Yes, angst, awesome. I got it. Yes, but just to get back over what Wolfe commented here, it is very, very often 130 NJ. By very often, I say always, pretty much. But when you hit those objectives, I always look at noon to 1 as well. And see, I actually commented on it. It's been a while since we've seen a noon to 1 worthy lunch rate. So definitely some very nice price action today if you take away that first hour, right? So that's why you can't lock in too much, right? For me, I wasn't there mentally today. I was extremely tired and, well, had a headache. So, of course, I wasn't going to be doing that, right? But if you were trading today, you would have had one loss followed by a win. And even if you had another loss within this, you still could have traded that successful trade. And if you did not have a random trade here, loss, win, win. Honestly, after a win that's that much return, I'm definitely not going to be looking for an additional trade. It's just not worth it, psychologically speaking, in my book. But let's say you missed all the morning longs. Well, you had a very nice PM short right there. I need to learn these wrinkles. I need to make them more, well, easier. I'm looking for a word for it, but more easily accessible. That's what I was looking to say. Thank you, Alex. A pleasure. Always a pleasure. I'm gonna give you guys some time for questions, but if not, that's gonna be it for today. Pretty straightforward day. Yes, definitely magic. I have one video for the model, right? But examples and specifics, yes, having everything at one place would definitely be worthwhile. But it would remove the need for these reviews, to be honest. That's the truth, right? I could just do some pictures at that point. Do you want a new video with more detail? What do you mean, NJ? In DMs, right? Do I want a new video? Am I gonna make a new video? Is that what you're saying? No, I am not, actually. Truth is, I wanted to share my model with people, right? Because so many people were asking me at that point, and I wanted to make something professional that wasn't just like, hey, here's a thread about my model, right? I wanted to share. Now, of course, the frameworks I trade have updated, right? Because I don't limit myself to anything right now because of the statistics I have. So if I know that the high probability move at 9:30 is going to be to go and target that previous day high, then I can trade that. And how I trade that is the rise model. So I need this high probability pattern for me to trade that. When I take profit and where I take profit is the rise model, right? How I manage my trade, how I trail. Where videos would be, where it's lacking pretty much is I don't really talk about how I trail my stop. And I mean how I manage my trade. This is something that I talk in the PA reviews, and we'll probably stay just for the PA review people for a while. Looking back to now, wow, even on these choppy, trash-ass morning ranges, I'm following exactly how you taught us. Took that first loss, watched it before that second long opportunity, gave up and didn't try to force a trade. Well, that's unfortunate. Still, if you're starting with a loss, sometimes it's easier to just take a step back and say, you know what, I'm done for the day. I'm just going to be watching. But if you do that every time you start with a loss, you're going to miss out on a lot of potential profit. Truth is, I usually have my first trade be a win. That's what happens the majority of the time, right? Over 60% of the time. But when I don't, I keep trading. Are you looking at stats during the open, or is it something you do earlier? Always earlier. Always earlier. Like, for example, the stats of London high, Asia high, it's 3 clicks away, right? I just opened my dashboard, pretty much, of Rise statistics, but the today's dashboard analysis, where you have all the data. That's also where I put my levels. This takes me 5 minutes, literally. I open the dashboard, I see the levels, clack, clack, clack. It's already pre-filtered in the ways that I personally use them. Now, if I'm looking at specific stats, sometimes intraday, I don't see a framework. So now I'm going to put in this random opening price, and then I go on the app, I look at the data while I'm looking at my chart. So it's always in my pre-market analysis, which happens between 9:15 and 9:30. I've already explained why it's only 15 minutes. But in that 15 minutes, I have time to analyze everything I'm going to be looking for today, where and what direction I am going to be trading, and all the statistical targets for the day. So for example, today I opened it, I saw the current structure, I said, okay, well, today I'm only longing. Accumulation, manipulation lower, taking out previous day low, daily fair value gap, I'm only looking for longs. These are the only trades. Well, no. Longs will be distribution, shorts will be retracement, right? Because I'm going to have a retracement objective if I'm shorting. Okay, and then I look at I know my news, right, in advance, 9:30, I'm here, I'm looking at my trade. Price is consolidating, I know the data for this, I know it by heart at this point, but if I'd have my dashboard open, I'd look at London session framework, Asia session framework, knowing the probabilities of reaching that high. I have the midnight open and the daily open. These are all high probability statistical targets with previous day high. So like if you were to ask me this morning, I couldn't tell you the exact percentage, but that's because I've studied it long enough. I mean, in the past 6 months, pretty much, I've studied all of these frameworks. So I pretty much know them by heart. But if you want to look specifically today, I'd filter with the news that we had and on the Thursday, and you'd have, I'm 100% sure we have an over 60 to 65% of reaching London high. Previous day high, probably closer to 45, maybe even higher actually. Previous day high with a previous day high bias because we just closed through the previous high. So definitely some pretty standard price action in my book. And I can understand how for some of you it might be harder, especially if you're just starting off or you don't have much experience trading. But truth is, for an experienced trader, this isn't a very easy day. The only part that was hard was wading through this bullshit. I'd love to tell you guys that from a position of having traded today, but I didn't trade at all. Didn't even take a loss or anything. I just didn't take a trade. I also was at work anyway, so I missed the trade more like it. Fair enough. Fair enough. Do we have any final questions before we call it a night? Been a little bit of a longer one here, 30 minutes, but we've talked about some pretty interesting stuff that I think people are going to enjoy. All right. Always a pleasure to be here. Glad you guys enjoy and glad I can be of service. You guys know me. I'm going to wish you all the best of night, and we'll see each other tomorrow for another price action review, which, by the way, will be happening at 5 p.m. I'll make a short announcement about it shortly. Have a good one, guys. Good luck trading tomorrow.